So today we're going to be on Seeking Alpha, and we're going to be taking a look at some of the top trending dividend stocks. So when we're on the main site, you can go ahead and just kind of scroll all the way towards the bottom here. And once you get here, there's going to be a section that is titled Dividend Investing, as you can see right over here. So let's kind of take a look and see at some of this information. So currently we got a couple different stocks here that are trending. A lot of these are pretty popular with dividend investors. Let me know in the comments if you have any, or maybe even all of these stocks as well. So you can see here, first and foremost, we got AT&T, obviously very popular with a lot of people. Current yield is still 7.40%, which is pretty crazy. I have it in my portfolio with M1 Finance. I'm very hesitant on buying more, and I'm very weary of wanting to sell it. I'm kind of like in this weird zone on what I want to do with it. But you guys can let me know as well too what you are doing with your AT&T stock. I'm just really hesitant. That yield looks great, but I'm in it for long term, and if they don't constantly increase their dividend yield at a healthy rate, my money is actually going to become worth less than it is now if they don't do anything about it. So that's the biggest worry for me with AT&T. But moving on here, we got Johnson & Johnson, which I do own. This one has a 2.54% yield. Pretty solid. Obviously less than 4% that a lot of people talk about when it comes to dividend investing. But I'm also all about dividend growth. Like, that's a huge thing for me. So let's actually see if we can take a quick look here onto their dividends scorecard, as they call it here. So currently 2.54% is their yield. Right now, their payout ratio is 42%, so way below the 60% that we're kind of looking for. But this is probably what makes Johnson & Johnson a little bit better than something like AT&T, is that their dividend growth rate over the last 5 years on average has been about 6.13%. Now, that's a pretty good growth rate. Not stellar, right? Nothing double digits, but still more than enough for increasing past inflation, but then also a really good way to increase that yield on cost. And that's a big thing that a lot of people don't talk about, is that yield on cost. Because, for example, let's go to the yield on cost, which Seeking Alpha does have. So what's really cool about this, by the way, you can get all of this on the free version of Seeking Alpha, just so you guys are aware. So the way this chart works is actually a little bit backwards. So this is year 0. So this is where we currently are. Like you are here. And then back here is 5 years ago. So this is 5 years ago. I guess you can see 5 years right there. So that's 5 years ago. So the chart kind of works this way over here. So if we actually take a look, right now the yield we talked about, 2.54%. If you bought it on that crazy dip back in March of last year, I don't know if I can get it right on there. Probably not. It's close. It's around like 3.4 or 5%. But nonetheless, let's say that you bought into Johnson & Johnson 5 years ago. Your yield on cost right now would have been, if you didn't buy anything more into it, for example, you would have a 3.77% yield. So you would be close to that 4% goal that a lot of people tried to achieve. Granted, it took you 5 years to get there, but you probably also had a really good opportunity for the value of your stock to go up as well. And if we go to 10 years, we can see here, 10 years ago, if you bought in, I'm going to, kind of skew the number here a little bit better because exactly 10 years ago is a little bit less. But if you bought it this time, let's say March 18th, 2011, your yield on cost would be almost 7%. That's pretty solid there, right? If we actually go to AT&T's example here, so let's go here. Let's go to the yield on cost. So again, remember this chart works backwards, but you can see already in the 5 years. So right now you're getting 7.37%. If you bought 5 years ago, your yield on cost is actually down because they're not increasing their yield or their dividend all the time anymore. And when they do, it is way below, even inflation. So if you bought 5 years ago, your yield on cost would be 5.52%. Not bad, but it's the fact that it's gone down. And you can see here in the last 10 years, it's stayed relatively flat. If we skew that number again, you'd be about 7%. So about similar to where you were with Johnson & Johnson. But look at the stock price 10 years ago, right? Like, where was that peak right there? It was like $30. And what is it at right now? 28. Like, what? Like, you're getting no value from the actual stock itself, just the dividend. I'll actually go here. Look, 0.04% growth from 10 years ago to where it is today. Like, don't get me wrong, I love dividends, and I do want to pay attention to dividends, but I think if you're somebody who has like a 15 plus year outlook as far as getting those dividends and actually potentially even needing them or wanting them, like, this doesn't look good to me. Like, are you telling me that 10 years ago, whoever bought into the stock is getting paid less as far as dividends than the person today? Like, I mean, they're getting obviously paid out the same actual dividend, but as far as based off their cost and no value growth, like, obviously there's been times where it's peaked at like, what, 44, 45, but still, yeah, I don't know. Not really my thing personally there. So that's why I'm like really hesitant on getting into them or getting more into them or even just selling them in general. So next up we have AbbVie. I actually also own this, so I own the top three here. Let me clean that up. So AbbVie. So this one is 4.80% right now. So this one's doing pretty well. They actually had a really nice dividend growth. Let me actually jump over to them. Let me close these two. And let's take a look at this right over here. So their dividend currently is 4.8%. Check this out. Look at their last increase that happened October of 2020. They increased by 10%. That's huge. That is a massive yield growth. So if you bought in at that price point, when they announced it, that forward yield was 6.45%. So with the amount of growth that they've had since, your yield is obviously going down because the stock price is going up. So those two are connected right there. So that is huge. Like, I love the fact that like I'm getting 10% more of my money for having done nothing. Like, absolutely nothing. So for me, I like seeing companies like this. So I would rather put more into AbbVie than AT&T because of that opportunity for growth and everything else on top of that. Now, next up here, you can see we've got Pfizer at 4.63%. I actually recently sold out of Pfizer. I think they kind of had the same thing with like AT&T, where the stock itself has kind of just been flat over the last couple years, and their dividend growth hasn't been stellar. Then we got Verizon over here at 4.53%. I haven't seen them in a while, so let's take a look and see what Verizon is doing. So over the last 10 years, way better than AT&T when it comes to actual growth on the stock at 53% growth. So if you bought 10 years ago, you're looking pretty there, at least. I mean, in 10 years, that's what, 5% increase. So it's not stellar on that end as far as growth, but it's better than AT&T. And then if we go to the dividend here, so it's at 4.53%. So way less than AT&T, but let's see where their growth is. If they at least had one growth, yeah, for 2020, which AT&T didn't, it's a 2% yield. That's not great. So, 2% is better than zero for sure, but it's like barely keeping up with inflation there. So not the best there. The year before that, even during a 2020 year, it was only 2.1%. So those don't look great, but at least you had growth in the stock value at the worst case scenario, unlike AT&T. So let's go here. Next one is I'm gonna clean that up. MRK. That one is at 3.59%. Haven't really actually seen anything about this company before. By the way, these again are all trending, so we can kind of take them for maybe people looking at them. So I guess I'm just kind of helping the trend go up more. So yield is 3.59%. Payout ratio is 40%, so we got a lot of room for growth. 5-year average has been 6.72%. Let's see what they did in the last year. So back in November of 2020, they increased 6.6%. So pretty solid increase, especially during, a 2020 year. The year prior to that, they increased by almost 11%. Even more stellar. And then the year before that, it was 14.6. So is it just, I don't know, because back here it was 2.1%. So definitely a couple of years where they had some really stellar growth on there. And let's see what they look like in the last 10 years. So last 10 years, about 122% growth. It looks like a lot of that actually came over since 2018. So not too shabby. They're not doing so great. It looks like over the last month, down about 6.5%. But hey, this is looking pretty solid. I mean, I don't know if I'd add them in. I don't even know what they do, to be honest. I usually go and find out on Robinhood. Robinhood gives me a good description of these companies, or I could just Google it. But Not too shabby. So this might be something that I can put into my watch list to see if it's something I would add into my portfolio. If you guys already own it, let me know, what your kind of reaction is to it as far as like, are you loving it? Are you hating it? Would love to hear from you guys. So next up here, we have Exxon Mobil. This one is at a whopping 6.17%. I was like having trouble saying that. So anything above 4% usually gets me a little weary as far as possibilities. Since we're already on this chart, down almost 33% on your money. Granted, if you bought 10 years ago, that would be not great. But if you bought sometime in 2020, especially down here in October, and you probably be getting some really good gains there. So we can see here, that 6.17%. Payout ratio is 155%. Oh my gosh. So in case you don't understand that is essentially meaning that in order for them to continue to pay out the dividend, if they still are, they have to go into debt to be able to pay that dividend. That to me is not a good sign with companies. I would not want to be involved with a company that has to go into debt just to pay me the dividend. I'd rather them be able to earn that to be able to pay me. So that is not good stuff there. I'm not a fan of that. I very much steer away from that every single time that's the case. So let's see, did they do a dividend cut? Yeah, I think they did a dividend cut before. I am not seeing it because it was 87 cents there, 87 cents there. So yeah, I'm not seeing the cut exactly, but still, I mean, to be holding on, I guess, is not bad, but I don't know. I'm in it for a long term with companies, and if they have to go into all that debt just for that, if it's temporary, maybe, but I don't know. That to me is definitely a little bit more standoffish at that point. Let me know again if you guys have that in your portfolio. I'd like to hear. Next up, we have KO, which is Coca-Cola. They are at a 3.37%. Now, I did have them for a very, very brief moment in my portfolio. I just didn't really like their overall performance for some of this. I actually ended up going with Pepsi over Coca-Cola just because. So we can see in the last 10 years, it was 53%, but it looks like it was quite skewed from over here back in 2012. So I guess in the last 5 years, they were up 14%, which is pretty low, to be honest. Like, that's not a lot of change. Not a lot of change at all. So let's go into the dividends here and take a look and see what people are seeing here. So the yield is at 3.37%. The payout ratio is 78%. So it's higher than the 60 to 65% that we usually like to kind of look at for a lot of these companies. The 5-year growth average is 4.25%. So let's take a look and see. So they just announced actually recently. So if you are a Coca-Cola shareholder, just recently back in February, they announced a 2.4% increase, which is just keeping up with inflation. I think if a company has to go that low, that's probably the lowest I'd like to see them do it. So 2.4% increase just keeps you up against inflation. Essentially just raises you a penny from 41 cents to 42 cents on there. What did they do the year before? So back in February of 2020, it was 2.5%. So pretty much a penny again. It was just a higher percentage because of, numbers and everything. Let's just go down one more year. So February 2019, again, 2.6%. So you effectively are just keeping up with inflation. It looks like back in July of 2018 was the last time they did a significant boost in their dividend increases. Now, before we continue on, I just really quickly want to mention that if you are interested in getting started with dividend investing and maybe haven't had a brokerage account to utilize, check out M1 Finance. I'll have a link for them in the show notes down below. This is what the homepage will look like. Go ahead and click on Get Started, and then you can go ahead and build up a dividend investing portfolio, which is the main app that I use to focus in on my dividends. That link will give you a nice little bonus and help support out the channel so I can continue to provide free content just like this for you guys. So now let's go ahead and take a look and see what some of these other companies are on this list. And now we have Intel right over here at 2.21%. I actually haven't seen them in a long time. And then the last one down here on this list is JP Morgan Chase at 2.39%. Let's actually take a quick look at them right over here. So over the last 5 years, 230% increase. Definitely if you bought in during that mid-2020, you're doing some really good stuff there. A lot of financials actually did really well. I have Ally and Discover, and both of those have done phenomenal, not just on the dividend side, but just on the growth side of things overall. So 2.39% yield. Payout ratio way below 60%, so we are looking pretty there. 5-year growth rate, almost 16%. So let's take a look at the news here and see what those last couple increases were. I know there was a little bit of a thing where they couldn't increase their dividends for a short while there, just for banks in general. So this might be skewed a little bit. Let's see, 90% or 90-cent dividend. I don't think they actually have it here where, well, let's see, yeah, they plan to keep their quarterly dividend at 90 cents per share for Q1 of 2021. And yeah, before that it was, 90 cents there, 90 cents. So yeah, they haven't been able to, just because everything was blocked for them in 2020. So I know that they weren't able to. I just didn't know if they did anything more recent. But let's see, what was the last dividend increase that they did. This was back in September of 2019, and that was a 12.5% yield increase from 80 cents to 90 cents. That's huge. So pretty awesome there. So it'll be interesting to see what they do, once they are getting back into the rhythm of doing dividend increases, and how that'll affect them as well too. And I would say from this list here of all these dividend investing stocks, always be very weary of anything above 4%. It might look shiny, it might look nice to get that nice yield, but there's usually a lot of risk for that. We saw with Exxon Mobil, at that 6.17%, like they're going into debt to be able to pay that stuff. That is not good at all. Let's see, what was AT&T's? Let me see what their, I don't know if I said it earlier, to be honest. So their payout ratio is 66.33. So, I mean, even though it's not bad, obviously, but again, the fact that you got no growth in the actual stock itself would be a little weary for adding any more. And like I said, I have some in my portfolio. I think I was in the same light of, like, I just bought it because it was a very popular dividend stock. Obviously, it's still trending even to this day, as far as this list goes. But I would say from all these companies, some of these are pretty solid companies. I think they have some good opportunities for growth. I think some of these on here, especially like something like Exxon Mobil or even AT&T, might be a little weary for some dividend investors, just because the yield looks good now, unless you're like needing the money for, income now. If you're long term, I would be very weary on looking at some of those companies that have good yields now, because you don't really need that money. Plus, you got to pay dividend taxes on that and all this other stuff too. So really consider, if like, do you really want 7% right now, or would you rather get something at like 3-4% yield and then have it get to 7, 8, 10, 12% once you do retire? One of my favorite stocks that I love talking about when it comes to dividends is Home Depot. This company here I really, really like. So overall, they've done really well. Their yield is only 2.5%. So a lot of, a lot of dividend investors don't talk about them as often. Payout ratio is well under 60% there. But check this out. Last dividend increase, they just passed this about a week or so ago. So if you are a Home Depot investor just like myself, we got a 10% raise. Pretty awesome. If we go back here a year ago, also a 10% raise. If we go back 2 years ago, they did a 32% raise. Now, granted, you're probably not going to see that very often, but still, can you imagine getting a 32% raise? They went from $1.03 to $1.36. Like, that's just mind-blowing to me. Like, that's so freaking cool. The year before that, 15%. The year before that, 29%. So, I mean, obviously, I would wish I was in Home Depot back in 2017, but that just isn't the case, and I can't go back in time. But I have ownership in this company. I plan on holding them for a long time. If I see them dropping like some other companies where they're not doing proper increases for their dividends, I might reconsider. But let me go back here. But from the overall growth of that company, I'm very excited for them, and I'm very interested to see how, the next couple years dividend increases go, because that just means I'm making more money on my money. Going back to this dividend trend here. So, and if you go to Seeking Alpha, by the way, you can also see dividend increases. So you can see all the companies that recently increased their dividends. This one's freaking at 13%. That's crazy. 13%. But yeah, if you want to check them out, you're welcome to. This list obviously does change for the trending. So sometimes other companies will pop up on here. Sometimes they're companies I'd never even heard of before, kind of like the MRK. Never heard of them before for the most part. So it's cool to kind of see these different companies that might work for the portfolio. So that way I can focus in on the dividends as well as growth, because I kind of like both aspects of it, not just dividends itself. I kind of have that opportunity with time to be able to get some growth in there too. But I would say the best way to keep on learning and growing is to, of course, constantly be watching and learning from that. So what I want you to do is actually check out my next video right over here so you can constantly learn more about investing and your ways to continue to grow your money with dividend investing. My name is Dennis. I'll see you in that next video.